Good day, everyone. Brian Hoops here with Midwest Market Solutions. This is our closing video commentary. It's Thursday, January the 9th, and once again, corn closed lower. We hit contract lows again today, down 5 cents in the March corn. December corn off 4 3/4. In the wheat, we were lower in Chicago as we saw export sales this morning hit marking near lows, and that sent some selling interest into Chicago. Now, we've mentioned yesterday in our video feature that Chicago hit contract lows, attracted a lot of funds selling, but notice yesterday Kansas City and Minneapolis did not hit those lows, and today they were actually higher as they both closed about 2.25 cents higher. So most of the selling interest is coming from speculators in the Chicago market. Over in soybeans, we had a marking near low in exports, but also 110,000 soybean sale to China. So we saw beans up 4.5 today, July up about 4.5, while new crop edged 2.5 lower. Meal and oil both closed higher. Livestock trade mixed. February up slightly. The April down 17, June up 10. We're waiting for cash direction there, and feeders were 12 to 20 higher. Hogs again closed lower, but look at how we were off the low. But look at this little chart here. We went all the way down into 84.50 in the February contract, but closed right back where we opened, or very close to it anyway. Down 32 in the Feb hogs. April off 60, June 62 lower, and July 27 lower. We're going to look mostly at fundamentals in the head of the report tomorrow, but let's look at one chart here in the corn. And if we look at this graph of corn, this is our target shooter. Larry Williams developed it using Fibonacci numbers, and when we look at the range from high to low of the last little rally, it projects the low or a target at 409 where we could get out of our short corn. That would be our target. Today's low was 408, so it came pretty close and then closed just above it. Now there's different levels, 404, 396. Those will be some more downside targets, but a lot of times you don't reach these two other targets right away. Sometimes it's more of an extreme before we get into that area, but certainly 409 was a target that was hit today. All right, let's look at the crop report, and we're going to pull up the convenience table here, put out by R.J. O'Brien. This looks at average estimate for production, 14.06 billion bushels. We have a range of estimates all the way up to 14.2. RJO's number at 14.071. And last year at this time we were 10.78. So we're going to have a much larger crop that gives us a lot more supply to work with. It's expected to be a little bit bigger than last month, 13.989. Yield, pretty much the same thing. Our yield is 161. Last year, 123.4 yield. So major change there in production for the corn. Slight change in production for soybeans, 43.3, which would be better than the previous numbers, and above last year's 79.8. Our production is 3.278, and last year we were at 3.034. So what that's going to give us is more stocks. Let's jump to ending stocks, quarterly stocks here now. Look at the corn stocks. The average guess is 10.7 billion bushels. Compared to last year, this is a huge amount more of ending and quarterly stocks. Last year at 824 in our stocks. Average guess on this year is 1.855. Anytime we get over a billion bushels of stocks, it starts to become a little burdensome. So certainly if we get close to 2 billion, it's extremely burdensome. RGOs actually think we could hit 2 billion on carryover stocks, which would be real negative to the market if that happened tomorrow. This number here is a major swing to the trade, and we see something coming in well above this area in grain carryover stocks. It means rallies are not to be found over the next several months. This is going to take several months to chew through any type of this crop, and really the only way we're going to get a rally is weather related into the spring. Soybeans, burdensome stocks, not that much compared to last year, considering we had a crop that's almost 300 million bushels larger than a year ago. Our quarterly stocks are less than 200 million, so we're using a lot more soybeans than what we're producing each year. Wheat, only one really that has a chance to be somewhat bullish, of quarterly stocks at 1.4, last year at 1.671. The number the trade will key off of on wheat tomorrow is winter wheat seedings, 43.5 million acres. Last year we were 43.0, so small increase in winter wheat, some in hard wheat, very little, in fact, a drop from last month or last year is expected in soft red, and most of the accumulation is in the hardwood states here. So, all right, that's a look at what's going to happen tomorrow. I think this will be the key number, the grain stocks, and we'll have analysis tomorrow afternoon. Hope you've enjoyed today's video commentary. Give us a call if you have any other questions.